Hey everyone, happy Sunday. Welcome to Crypto Weeklies. My name is Josh. Today we are going to discuss price prediction using machine learning technique known as ARIMA model, which stands for AutoRegressive Moving Average. So as you can see on the screen, uh, the the Bitcoin monthly price is tracked on a logarithmic scale, and the color code is actually pointing to z score, which is the standard deviation away from mean. So you can see during the peak the z score of the past cycles is let's say in 2017 was above 4, whereas in the last cycle it was about around 2. So that's how, based on those z-score as well as the uh, flattening of the trend, is the price prediction being calculated from June of 2023 till October of 2027. And you can see there is another regression trend line which captures the uh, monthly for like the trend line for monthly forecast. And these price predictions are the range of the price prediction on this one is related to what the ARIMA model, the machine learning model, calculated based on the trend, the historical data, as well as there is another range that I have added is what happens when you consider two standard deviation, the price to be two standard deviation away from the mean, because we are interested in how high can Bitcoin go in the next market cycle. So if the trend follows there would be a point where even though the trajectory would be different, but there would be a point in Bitcoin's next market cycle where the price would correspond to two standard deviation away from mean. And assuming that the mean stays constant, even though let's say 1 month the price tracks above this or goes below this, the overall mean should be the same. So that's how this ARIMA model would work, and the two standard deviation away from mean would correspond to a value around 95,000 in December of 2027. But this is just purely mathematical model and not to be construed as financial advice. It's just an exercise of how it could look when you see the next bull run, if there is a bull run. Another consideration on this model is the base values. Instead of considering what could happen based on standard deviation, this is what the actual values of the ARIMA forecasting model pointed to. So these values, as you can see, is for this month, the forecast is 24,000, but the actual close is at 23,000 currently. So that's how, so these are the forecast values. As you can see, they are basically, um, they have been flattened, and they have been the trend or the cyclicity or seasonality in these prices have been removed. So you can see the average trend is moving over, growing to the right, and the price is growing based on this trend. These ARIMA values point to again a forecast based on historical data, and you can see there are the way these forecasts are also color coded are using the z score for the forecast. That's why when the forecast share highly bullish values, that's when the the probability of these forecasts being realized goes low, because they are moving to a higher z score every time they move or propagate uh, through time. So that's something to worth noticing, that even without any standard deviations away from mean, just the trend would correspond to a price of around $68,900. That's just the baseline trend of Bitcoin, considering the z score of 1.9, which is fairly conservative, considering it's just we are almost 4.5 years away from that time of December of 2027. So just wanted to share that. Another scenario that I have considered is one of a hard landing or a recession. So that's where these prices would not necessarily be reflected um, at, in the way that they were being reflected. The z-scores were from the cycle of 2017. The z-score was at its peak at 4.2. The last cycle it was at peak at 2.2. So in the next cycle, if that cycle coincides with a recession, uh, one could assume that these uh, the next cycle could be a tempered down version uh, of a cycle due to recession. And you can see the timeline of those numbers might not coincide with the actual future values, because it is considering -1 standard deviation away from mean. So that is uh, to the conservative or the bearish side of price prediction. One could say that from its historical data, a price that comes to uh, comes to the output of machine learning is model is $8,500. That would correspond to one standard deviation of lows away from the mean. So maybe not in August of 2023, but let's say if we have a hard landing or a recession at some point in future, this price at this point would coincide to a bottom based on this machine learning model. So just wanted to share that. Thank you so much for listening to me today. I hope you have wonderful rest of your Sunday. I'll keep on making similar videos using machine learning as well as other data science or just analytics using TradingView. So please stay connected on this channel. My name is Josh, and my name of our channel is Crypto Weeklies. Thank you and have a nice day.